1%.
One of China's largest gold producers is taking a majority stake in Focus Minerals in a deal worth $228 million.
Yeah, the directors of Focus Minerals recommending the deal. It'll see Shandong Gold Group taking now a 51% controlling interest. Well,
joining us, apologies, sorry Carsten, joining us now with all the details, Focus Minerals Chairman Don Taig. Thank you very much, Don, for joining us. Just tell us about the deal and the recommendation, why you've given that recommendation to shareholders.
Thanks, Brooke. Thanks, Carson. Well, the reason we're giving it the recommendation is that, if I can give you a little bit of background, what we normally do with the management team is in January the board meets with them with regards to the strategic plan for the next 3 years. In January of this year, we asked them to pull together a life of mine plan. That was presented to the board in March, and it was clearly a very exciting opportunity. But when you looked at the revenue versus the amount of cash that was required to actually get to that revenue base, we knew that we would have a large funding exercise. We could have kept going as we are today and basically raise all those funds out of, or raise a significant number of funds out of our organic position, but it wouldn't have been to the point where we could have put together this life of mine plan that really would have created the underlying value for our shareholders. So the board then took the decision that what we would do is look for a cornerstone investor. We had looked before, but when we looked in the Australian context, most Australian companies want to take a small investment in the likes of a company like Focus, and in terms of then the focus around their board table that we would get would be very small. We'd be nothing more than strictly a stock investment as far as they're concerned, unless we got a real out-of-the-box one. So what we needed to do is have someone that would support us, could see what we were trying to develop, could support our shareholders as well in terms of bringing cash in at a premium rather than the constant pineapple that shareholders have to deal with, which is going back and raising funds at a discount all the time. So given the funding that we thought would be required for the plan, we then started to look around for like-minded investors, and we did this in a very small but conscious way. I undertook most of the discussions, in fact all of the discussions with interested parties, and in the end the Shandong Gold deal was the one that proved the most beneficial. They had similar operations to us, albeit a lot more. They had small mines in large parts of China that they were producing significant amounts of gold from. They knew how to handle their cash cost position. They also have investment in heavy industry, so that we knew that we would be able to get some synergies with regards to their investment, with regards to our processing equipment, perhaps ongoing leasing of heavy machinery and so on as we develop the life of mine plan. So for us, it stacked up on so many measures that it was a very clear opportunity.
Don, could I just come in on that one and just understand as well, it is subject, is it not, to an independent expert report, just to confirm indeed that the terms of this placement are reasonable, and not to mention as well, FIRB has to give its blessing. What are some of the concerns, the lingering ones, that might just see this one fall short? What's your contingency in the likelihood that FIRB doesn't say yes?
I don't expect FIRB not to, but obviously we have to go through, or Shandong has to go through the process, and we'll assist them with that process because that's an undertaking we've given. But I would think that if you look at the requirements for FIRB, this is not a strategic position in the Australian market.
But it is a majority stake, isn't it?
It's a majority stake.
So yeah, what safeguards would you be looking to assure FIRB of, and for investors too?
Well, I think if you look at the subscription deed and also the notice of meeting when it comes out to shareholders and the amount of information we've put into the ASX release, it will demonstrate that Shandong really have said, look, we understand China. We understand what we'd like to look for in Australia, but we know that we can't run an Australian company. We don't understand all of the rules and regulations that you would be required to go through. So what we want to do is give you the one thing that you currently only could largely get at a discount, which is cash through raisings in the capital market. And what we then will do is we'll manage this company for the benefit of all of our shareholders as part of our stewardship program that we already have with our existing shareholders. So I think FIRB will see that whilst you have a 51% equity interest going to the Chinese, this is very much about keeping this company in Australia, run by Australians, managed by Australians and worked by Australians. Now, there'll be some expertise that Shandong can provide to us, but that will be peripheral to the deal. Important, nonetheless, but peripheral. So I think that FIRB will be able to see that this is a good transaction for shareholders. It's a good transaction for the country, because what it will do is, I know, bring further opportunity for consolidation in the three major areas that we certainly work in at the moment, and also bring opportunity for increased employment. So it's a very positive aspect for Western Australia and the goldfields in particular.
Don, just in your dealings with Shandong then, what are you understanding of some of the attitudes of these Chinese players towards that FIRB process, given, you know, FIRB's obviously been in the headlines lately related to that Cubby deal? It's quite, you know, it's quite topical.
That's true. I agree with you, and I think that, there will continue to be that level of discussion around deals like this. And one of the questions that Shandong asked me is, before they even contemplated making the deal, they wanted to understand that we would support the investment, because they didn't want to embarrass themselves, nor embarrass the Australian government, or Focus Minerals for that matter, with regards to their investment. So they were keen to ensure that we'd thought about it as well, in the context of whether or not this is a sound opportunity to present from a Chinese and an Australian perspective. And I mean, I'm not a xenophobic type of person. I look at the underlying transaction and what it will do for our shareholders. And effectively what we're able to do is bring in more than our capitalisation to date. Our capitalisation currently today is around about $191 million, and we can raise 227.5, or as you said, $228 million, by asking our shareholders to give up 51% of the company. 49% of the company will still be out there as a very liquid stock, which by any imagination in the Australian market, that still makes it very liquid. We trade well now. I think that what shareholders will see is the ability for the share price to consolidate to a new base and then grow as we basically put that money into the ground, which is what Shandong wants to do, and see it developed, and also increase our margin through lowering our cost base.
Just on that cost base, final thought, rising input costs, an elevated Australian dollar, what are you doing to sort of, I suppose, hedge against both of those, and particularly when it comes to your workforce, Don? Is this deal going to actually bring in, for instance, a Chinese component to the workforce to augment what you've currently got?
I would expect that that would be a reasonable question to ask, but no, we're pretty well got a very large and fully employed workforce. We work with contractors, so all of our mining, other than at one of our operations where they are our own employees, is undertaken through Barminco and through Mining and Civil Australia, and they, for assuming that they continue to meet tender prices and so on, will continue to be our suppliers, and so therefore we don't see any impact in that regard. I do believe that we'll see the possibility of our ability to be able to import capital equipment at a better price than what we've been able to date. And then that'll increase the opportunities for the suppliers and service people in the Kalgoorlie, Coolgardie and Laverton regions.
Dr. Don Taig, we must leave it there. Thank you so much. Appreciate your insights on that one. Congratulations.
Thanks, Carson. Thanks, Brooke.
Right.
Fantastic. From Focus Minerals, cloud computing is dramatically changing the way we all do business, and this week over 90,000 people are expected to visit the biggest cloud convention in the world.